In this video, I share a simple example of how time value can directly affect the premium value of an option contract. If you're new to my channel, welcome. Here you're going to find that I'm publishing videos about small account investing and selling options for income and other wealth building strategies. In this video, I'm going to discuss the time value component of an options premium. But before I get started, I need to take a moment and address something that's happening in the comment section of my videos. There are one or more individuals involved with injecting an endless stream of spam into the comments. Now, I apologize to my subscribers and viewers on my channel that you have to put up with this, but it's out of my control. Now, the best that I can do is spend about 1 hour every day deleting these comments, and so I do that, but also I can make everyone aware of what's going on. So the spam that these people are writing, it's very deceptive because they're making it look like I'm actually writing the comments. The spammers are using my name, but you'll notice some discrepancies in their comments. And there are two simple ways to spot the imposters. Here's a quick and simple method for identifying a fake comment from a spammer. Here's a prime example. If you take a look at the name, who posted the comment, you'll notice that the name is not highlighted. And let me show you what a real comment looks like. So here's a real comment from me, and you can see that the name of my channel is actually highlighted. And that's the easiest way to tell that a comment is fake or genuine, is whether or not the name on the post is highlighted or not. And then also another dead giveaway is the fact that if you look at the fake comment, it shows a low number of subscribers. It shows 1 subscriber. And it may show 0 or 1 or some low number. Well, obviously that's not going to be for my channel, but that's another indicator that you can look for. And just to be clear, I will never recommend for you to contact someone for trading Forex. I will never recommend for you to contact someone about trading cryptocurrencies. I'm never going to ask you for your email address. I won't ask you for your phone number. And I will never ask you to use WhatsApp to contact me. Now that that's out of the way, let me share with you 3 examples of how time value affects the premium of an option contract. So here's my account history, and we can actually see the transaction where I sold a covered call for Riot with an April 1st expiration date. Let me go ahead and open it up so we can see the details behind this transaction. So you can see I sold a covered call for Riot, stock symbol RIOT, with a $58 strike price and an expiration date of April 1st, 2021. Now I submitted this order on the expiration date. You can see here, I submitted on April 1st, and the order was filled at 6:38 a.m. Pacific time. Now for selling this covered call option contract, I received 41 cents per share, and when this contract was filled, a credit of $41 was immediately added and deposited into my trading account. Here's a daily chart for stock symbol RIOT going back to February of 2021. So for this transaction, I was able to sell a covered call on the day of expiration, April 1st. The stock had just hit a bottom of the dip and was starting to recover, moving its way upwards. So I thought this is a perfect time to sell a covered call. The price closed at $52.03, which is well below the $58 strike price that I had set for this covered call. So this option contract expired worthless. I was able to keep my shares, and I also kept the full premium. So let me just take a moment and summarize this transaction. So I sold a covered call on April 1st of 2021, and it was for stock symbol RIOT. Now this option contract had an expiration date of April 1st of 2021, so the actual length of this contract was 0 days. Now I sold this covered call contract with the $58 strike price, which at the time paid 41 cents per share. Now as I showed earlier, this contract expired worthless, which meant I got to keep the shares that were reserved in my collateral. Plus, I also got to keep the entire credit that was added to my account for the premium. Here's example number 2. So I opened up my account history, and we could see the covered call transaction where I sold Riot with an expiration date of April 9th. Let me go ahead and open it up so we can see the details. So I'm selling a covered call for stock symbol RIOT with a $53.50 strike price that expires on April 9th. Now I submitted this order on April 8th, so 1 day before expiration, and this order was filled at 7:40 a.m. Pacific time. Now for selling this covered call option contract, I received $1.05 in premium, and when this option contract got filled, I received a credit of $105 deposited immediately into my trading account. Here's a daily chart for stock symbol RIOT going back to February of 2021. So for this transaction, I actually sold the covered call on April 8th, just 1 day before the expiration. Now as I look at the chart, I see that the price had bounced off the support level of $47.63. So in my mind, this stock is starting to go upwards, which is confirmed on April 12th and then the huge gap up on April 13th. But for this transaction, we're going to focus on the expiration date, April 9th, when the stock closed at $49.63, which is below my strike price of $53.50. So this option contract expired worthless, which means I kept all my shares that I used for collateral, plus I also kept the premium that I was paid. So this was a covered call that I sold on April 8th, 2021 for stock symbol RIOT, and the expiration date was April 9th, so that made the length of this contract 1 day. Now, I had picked the $53.50 strike price, which at the time was paying $1.05 per share. And as I showed from the daily chart, this option contract expired worthless, which meant that I was allowed to keep my shares. And also, I got to keep the full $105 credit for the premium that was paid to me. Here's example number 3. So going into my account history, we could take a look at the actual transaction where I sold a covered call for Riot with an expiration date of April 16th. So I'll go ahead and open it up so we can check out the details. And we can see that I'm selling a covered call for stock symbol Riot, RIOT, with the $62 strike price and an expiration date of April 16th. Now I submitted the order on April 13th of 2021, so 3 days before expiration. And this order was filled on April 13th at 11:08 a.m. Pacific time. Now for selling this covered call, I received $1.80 per share. And in return for selling this covered call, I received $180 as a credit deposited immediately into my trading account. Here's a daily chart for stock symbol RIOT going back to February of 2021. So for this trade, I actually sold the covered call here on April 13th of 2021, just 3 days before expiration. The stock price experienced a huge gap up and actually broke through the resistance line at $57.31. But then on April 14th, the stock took a big dip and actually broke through the support line at $47.63. And then on the expiration date of April 16th, the stock ended up closing at $44.64, which is well below my strike price of $62. So in the end, this option contract expired worthless. So I ended up keeping my shares, plus all of the premium that I collected. For this transaction, I sold a covered call on April 13th of 2021 for stock symbol RIOT. Now this covered call option contract had an expiration date of April 16th, which meant the length of this contract was 3 days. Now I had picked the $62 strike price, which at the time was paying $1.80 per share. And as I showed in the daily chart, this option contract expired worthless. So I ended up keeping the shares that were reserved as collateral, plus I also kept the $180 premium credit that was added to my account. So my net profit for these 3 transactions was $326, plus I still maintain ownership of my 100 shares of RIOT. Now the average duration of these contracts was 1 day, but as you can see from the table, the amount of premium that I received based on the contract length varied greatly, and this is due to the time value associated with the contract itself. So the longer the time value, that is the number of days prior to expiration, the larger the impact it has on the premium. So the time value is a critical component of the overall extrinsic value of the stock option premium. If you liked this video or learned anything from it, do me a huge favor and please smash the like button. And if we look at this mathematically, then the time value is equal to the premium minus the intrinsic value. And recall that the intrinsic value is the real money portion of the premium. Do you want to learn more about intrinsic value? Or maybe you just need a refresher? Then check out my video on intrinsic value. I explain what it is, how it's a critical component of the premium, and also how to compute the intrinsic value of an in-the-money option. I'll leave a link for this video in the description below. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.